Hey there, traders. Todd here of Trading Analysis and Inside Edge Capital Management. So sorry to be quiet on the free videos. My fault. I've just been so heads down in the markets. It's just the most engaged I've been in the markets, I think, since I think the GFC, since the global financial crisis, when I was trading for the hedge fund and doing analysis for the brokerage firm. So it's been crazy. It's been fun, but I've been slipping on the marketing videos. I'm sorry. But it's heads down, man. It's time to make money in here. So, all right. So I think we're seeing a little bit of hesitation in the market. I think there's some fundamental reasons. I think there's a macro. There's some technical reasons. I'll show you what's up, and it's just been historic with what's going on in semis. And I'm longer term very bullish, but I think near term we're having some issues. Let me see if I can shed some light on it. So data over the last couple of days. So CPI on Tuesday it was all about 1/10 above expectations, with the exception of the headline month over month as expected, but everything else was 1/10 above expectations. Then we just got PPI this morning that came in at 0.6. When the expectations are 0.3. So that doesn't help the current fundamental and macro situation, which is this. Crude oil is coming up off the lows after the 60, 69, 72, 73. Now all of a sudden we're pushing back into the 80s. So 50% price retracement is here. Big zone is going to be the 618 at 84, spot 54. Plus we're going to have downtrend resistance in crude oil. And that's going to be coming off of a pretty significant top back here in June of 22. So crude is under accumulation, and it's being confirmed on an intermarket macro basis by a move up in rates. So you can see this is the 10-year yield in purple overlaid on crude oil. I mean, clearly the correlation is there. And then when you get the CPI and PPI slightly hotter than expected, that doesn't really help things, right? So the market is looking for a couple rate cuts this year. Whether that comes or not, we'll see. And when you get this kind of pricing data, as well as the move up in rates like this and commodities, it really doesn't help things. So the S&P is coming into a pretty significant zone of resistance. And I'm doing a fib course, and in fact, I'm giving the second presentation today at 2 o'clock Eastern. And last night I was going through showing people how to use these tools. And we arrived at a zone, which I knew about ahead of time, but I just did it fresh, and I'll show you. There's a really significant zone of resistance using multiple trend and swing waves, trend and corrective waves, and using the swing wave indicator and the SPY. And it's at current levels. So this is daily SPY. And what I'm doing is, again, looking at a lot, the most significant swings from the move up into 22, down into, late 22, the move up in 23. I'm using all of the significant swings to derive significant zones of fib support and resistance. And there's two zones in the SPY daily. The first is highlighted here, and that was, the top at the end of last year. We tried it again in January, and then we just broke through January. Here we are in March. Now, this is the next zone. This is a really, really significant zone of fib resistance ranging from 510 to 521 in the SPY. It was funny, in the presentation last night, I was like, I didn't have RSI up, and I was like, guys, I'll bet you all free access to the upcoming fib course, fib training I'm doing, that there's going to be significant momentum indicator divergence. I could just tell, because when you move into such a significant fib resistance zone or support zone like this, and you have the shape price bars that you do, you're going to have momentum divergence, which is RSI. And the RSI is here. It's kind of hidden behind volume, but I thought there'd be divergence, but I didn't think there would be 5 lower highs. This is crazy, right? So the high reading was back here in December of 23. We got the first lower high, second lower high, third lower high, fourth, and now fifth. So we have 5 lower highs on the stock 14 period RSI into a significant divergence, so into significant fib resistance. So I think, based on the macro, fundamental, and what I'm saying, like, I'm really bullish, and we've made a lot of money on the upside, but I don't see how we're not going to get out of this zone unscathed without some kind of correction. So we have downside hedges on, and I'm going to go over that in the 2 p.m. Class today. So check us out at tradinganalysis.com if you'd like to learn about Fib. I'm going to have a really good course coming up here. First session is today at 2, and there should be a link just below. Okay, leave it there, guys. Have a good one, and I'll see you in Fib training. Stay safe out there.